In today's video, we're going to discuss which Yieldmax names I'm selling in order to re-enter FEPI, which is the Rec Shares Covered Call ETF on the FANG names, which have a lot of magnificent 7 names, and it has a monster dividend. Okay, I'm going to give you 5 reasons why I'm doing this move. Okay, so we earn over $150,000 per year in dividends at this channel, and my performance shows that I'm up 20% for the year, 22% for the year, and the S&P is up 18%. So I'm beating the indexes on a year-to-date basis using this approach, and you can too. Email me for my e-guides at aikentod48@gmail.com if you're interested in doing the same and living the FIRE lifestyle, which is financially independent, retire early. To all newcomers at this channel, I use margin, a fraction of this margin to get ahead. Okay, for every $1 you put in your account, you get $4 of purchasing power. Okay, $4 of purchasing power. I just use a fraction of this number to get ahead in life. This 150,000 that you see here in debt, okay, 150 grand. It's not so risky because it will be paid back in around a year, less than a year, because I earn $155,000 per year in dividends. And this 450 will go to 600,000, and my debt will be at 0. I'll then be left with all these dividend paying assets to myself, paying me monthly cash flow for life, paying my bills and qualifying to banks for loans. So this is how you live the FIRE lifestyle truly. And I'm doing it with dividend funds and stocks such as FEPI. We've already done a video on this, so this video is going to be more about the application of how to use FEPI. But FEPI does sell covered calls on FANG stocks primarily, and in addition to the dividend being around 20 to 25% in FEPI, okay, I just thought that there are some compelling reasons to re-enter this fund. Okay, for one, the maintenance is the same as Yieldmax funds. So the Yieldmax stocks that I sold, they have 50% maintenance. So if you go to FEPI, okay, where's FEPI? FEPI right here, okay. All right, it has 50% maintenance, which is the key to living the FIRE lifestyle. Maintenance is in my Volume 3 Margin E-Guide if you need help doing more of this. All right, so FEPI snapshot, even if you don't use margin, you need to be aware of maintenance because that tells you the risk of a stock or a fund, and it helps you withdraw freely from your account. So if you have high maintenance, then you can't withdraw freely out of your brokerage account. So 50% maintenance, that's what Yieldmax funds are. I've showed you in many videos in the past. So 50% maintenance, it's the same maintenance for FEPI. And I thought that, that's nice because, so you go back to your available for withdrawal because this is the key number to watch. Okay, available for withdrawal. Right here, 216,000. So while my account is 450, the available withdrawal is 217. That means that I can withstand over a 30% correction overnight or over the course of a month even, and still withdraw freely out of my brokerage account and live financially free out of it. All right, so maintenance is the whole key to that available withdrawal. If you have high maintenance, then that available withdrawal number drops. Okay, so you have to be aware of this number. All right, the second reason why I did this, okay, I'm making this switch and selling some Yieldmax names to go to FEPI, to re-enter FEPI, because we were already in FEPI once and we made some money in it actually, and I sold it, but it didn't have a dividend then, so now the dividend is announced. Okay, so I thought it was plausible to sell to buy FEPI because Yieldmax names had a nice run. Okay, so as you know, Yieldmax names for us, like Tesla is even up nicely today, so that's good to see. It's encouraging. We've been making videos on Tesla. But all these Yieldmax funds, like Microsoft continues to be on a tear. Coney's been doing well. Disney, Disso has been doing nicely. Square, 14%. So all these were up about $100 for me, 6% Netflix, AMZ, and they're paying you these nice dividends, these exorbitant dividends, okay, of, around even some cases 50%, 30, 40, 50, 60%. All right, so what I did was I trimmed these. I didn't sell these names Okay, I trimmed them. So I sold some shares, and that's the way to keep the long-term growth strategy intact, and while also not selling too much to pay taxes. And then, you free up a few $1,000s and it knocks down your margin debt. Okay. Yieldmax names had a big run, so it was prudent to trim those. But then I thought it was plausible, since they've had a big run, going into my third point, to sell covered calls on these FANG names, because they've had a big run, just like Yieldmax names have had a big run. So that's why it makes sense to go back into FEPI, all right? Because they sell covered calls. They're a little more conservative. And they're diversified, okay? Point number 4, they're diversified, unlike many Yieldmax names. So you're getting some of that diversification, and it's covered call related, okay? So it's not synthetic calls like Yieldmax. It's covered calls, and it's considered a bit more conservative, okay, than, just owning the outright stock, because you're getting paid some premiums, 20 to 25%, some dividends to offset the downside. And also, FEPI is a majority of the index. It basically is the index, okay? It's like 20 to almost 30% of the S&P, these large cap tech names. With my approach in investing, I always go with the indexes. Cornerstone is where I get most of my dividends from. The 150 that you see in dividends, most of that, again, is Cornerstone, because it's the index. I put 400 grand or so in this fund, these two funds, so that I can live the FIRE lifestyle, but it has low maintenance, and it has a 21% dividend, and it drips down at NAV, as you guys know. But for all the newcomers at this channel, Cornerstone is a 5-star fund. Well, it's 4-star here currently. It fluctuates between 4 and 5-star, and it beats the index. See, there it is. It's back to 5-star, okay? Just to let you know, it does fluctuate. And it beats the indexes. So when you look at the charts of Cornerstone, you can't say in my account, well, your whole strategy is going to blow up or something because Cornerstone. No, my performance is up, 20% for the year. I was up 50% this year, okay? But closed-end funds had a tough month in the month of October. But Cornerstone had a nice rally back. And this is my largest holding. But you have to learn how to play this fund properly. All closed-end funds, beware. You have to play these and time them around their rights offerings. When you buy my e-guides, I give you the Discord chat room service, which gives you the alerts to the rights offering. You can also track my portfolio here on Discord. We have 500 members, over 500. We have almost 600 members here in Discord that have unique experiences in the market, and they can share those with you. They can answer your questions about which funds have the certain maintenance or the special drip for Cornerstone, because, again, they drip the dividends in Cornerstone down at the NAV. Okay, this is how I'm getting my performance and my income. I pretty much told you the reasons for owning FEPI, and you could theoretically click out of the video now, but why do that when FEPI is just a complementary piece to the whole picture in my portfolio, okay? You have to have a total approach when you're investing, and Cornerstone has a special drip here for all you newcomers. Again, these $4,000 lots, okay, they give you instant gains each month, okay, thousands of dollars of gains each month. In October, there were 30% premiums around that, so you're getting huge gains plus your 21% dividend, and you're getting capital gains. So today we're up, 2,300. We were up, around 3 earlier today. It's kind of a calm day, okay, but this is still coming from Cornerstone, and it's offsetting, some of the pain that we're seeing. It looks like in JEPY today, which is another one of my index funds, JEPY, QQY, that I get a lot of my dividends on. Those are still unproven. But Tesla is offsetting some weakness today that we're seeing in Defiance funds. And anyway, this is all part of a total approach, okay? I have a lot of index names, and the Yieldmax names that I do have are basically tied. They're in the index, and I make them like a mini portfolio within the portfolio, a mini index within all of my index plays. So I did sell, yes, some of these Yieldmax names. I could show you my alerts. I just trimmed each one of them, about $100 each. So that's how you keep the long-term growth going with these Yieldmax names. All right, if you need help doing what I'm doing, again, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to Discord and my phone number for life. So keep that in mind. If you like the video, click like or subscribe, and I'll talk to you soon. Thanks.